Alright, so today we're going to get real because I guarantee you've done this. I've done this, and every trader has done this at some point. You close a winning trade way too early because you don't want to lose the profits that you've already gained. And then you hold a loser for way too long. You move your stop losses because you want to hold on to that trade as much as possible because you have that hope that it will return back to your break-even point. And it's funny because every trader knows that that's the exact opposite of what we should be doing. But we keep repeating and making the same mistakes each time. Realistically, we should be taking losses quick and letting the winners run. Yet most traders do the complete reverse of that. Today, I want to break down why this happens, what goes on in your head during this time to make you do it, and more importantly, how to actually fix this. I'm not talking strategy today, I'm talking pure psychology. So let's get into it. So to start from the beginning, there's a principle in behavioral psychology called loss aversion. It basically states that humans feel the pain of a loss twice as strongly as the pleasure of an equivalent gain. So a $100 loss hurts twice as much as a $100 gain feels good. Now think about what that does to your trading decisions. When you're in profit, you're scared of losing that good feeling. And when you're in a losing trade, you're terrified of locking in that pain of losing. So closing winners early and holding on to losers is actually the logical response of your brain, but it's totally illogical for your trading account. You're not fighting the market, you're fighting your psychological instinct that's been around for millions of years. So no strategy can fix this. Only awareness and rules can actually fix this. So let me give you a real life example of what happened to me when doing this. It was around a year ago. I was still working full time here in Dubai, but I was still trying to actively trade every day as well. I recently just topped up my trading account to be honest, a quite large sum of money, which I knew I wouldn't be comfortable with losing completely. It was pretty much all my savings, but I put it in my trading account anyway. I then opened a trade. It was a really good setup, clean entry, nothing wrong with the actual setup itself. It ended up going in my direction and my brain was just saying, just take the profit, take the profit, take the profit. But it was almost edging my take profit. So I just wanted to keep it in there. What happened next was it completely dumped. So around a couple hours later, I looked on my phone and I was in the negative by quite a large amount. And I saw it was nearing my stop loss. So instead of just letting the trade run, letting it run into a loss, I removed the stop loss on the trade, which, as you guys know, is one of the worst things you can do. Then over the next few hours, the trade just kept going lower and lower and lower. And it was so low that I couldn't force myself to close the trade because I didn't want to lock in that huge loss. So I kept letting it run. I never placed a stop loss, and eventually I got margin called and I lost everything. And that wasn't just my trading account, that was all my savings and my rent for around 3 months living here in Dubai. And at first I just got angry at the market and I just got angry at trading. And this went on for a few weeks, as you can imagine. But slowly but surely I come to realize that it was all down to myself. And the reason why it came down to that is because I had huge fear. I had fear of losing that money. It wasn't strategy and it wasn't about the setup. It was about trying to protect my ego. And I'm sure we've all been in the same position where we've just held on to a loser because we were just so afraid of losing that account or that amount of money. And yeah, it might have not been as severe as my case, but we've all been through it. And unfortunately, we need to go through these stages to actually learn and fix the kind of issues we've got going on behind it. So I came up with 4 reasons why traders do this and what the 4 main mistakes are. So number 1 is we have attachment to unrealized gains. There's no difference between being up $200 and not taking it, and never being up $200 at all. But your brain treats unrealized profit like money you already own. So closing early feels like protecting your capital, when in reality, you're stealing from your strategy. Number 2, the "it will come back" belief. This is ego disguised as patience. You're not waiting for price to return. You're waiting for reality to match your story. But unfortunately, the market doesn't owe you a retest. There are no or very rarely any second chances when it comes to trading and trades that you've set. Number 3 is the revenge logic. What I mean by this is if you took a losing trade earlier, your brain tries and wants to fix it by doing one more trade to get back to break even or slightly in profit. But this is where you end up closing winners way too early because you're trying to feel safe again and not trade properly. Then that just leads to trading even more, which just leads to revenge trading and over trading. And we all know that they're not good. And number 4 is the fear of missing out versus the fear of being wrong. Closing early equals the fear of missing out on profits. And holding losers is the fear of just being wrong. The worst part, both of those fears are stronger than the desire to execute your plan correctly. So now you're not trading the chart, you're purely just trading emotions. So how do you fix this? Let's talk solutions. Practical stuff that you guys can start doing right this second, today. Number 1 is define your exit before you enter. Not just stop loss and take profits, but where you're going to take partial profits, when you'd let it run up, and where you'll exit if the markets do change completely. Number 2, journal only one thing, and that is, did I follow my rules today? And rate yourself on a scale of 1 to 10. No P&L, not the amount of pips, just did I do what I said I will do? And I guarantee you, the days where you followed your rules the most will become the more profitable days anyway. Number 3, use the countdown method. Before closing any trade early or letting a loser run, just wait 5 to 10 seconds and ask yourself, if I had no emotion to this trade, would I hold it or would I exit now? Most of the time, after that quick 5 to 10 seconds, you then realize that the plan that you made when you had no emotions attached to this trade was most likely correct. So you still end up following it. However, if the emotions are too big at this point, you can always close the trade. It's probably not the best thing to do, but you can do it. But as long as you know, as soon as you close that trade, you're closing your laptop and you're going away from the charts at least for 24 to 48 hours. Because at that point, your emotions are just taking over your trading. And number 4, just make peace with your losses. It's inevitable that the markets will take money from you, but you can control how much. A quick, small red day is what professionals have, but a dragged out, huge losing trade over a number of days or hours if you're a scalper, for example, is just amateur. And number 5, which is a really good psychological trick, is remove the word hope from your language. Just never say, I hope it will come back, or I'll just hold it for a little bit longer if it's in a losing position and you keep thinking about moving your stop losses down, or I hope it will flip. If you hear yourself saying any of these, just exit immediately. Just get out of trading for that day. Because as soon as you realize that emotions are taking over your trading, you do not need to be near the charts anymore. You need to be outside. You need to be doing something else. And the moment you just pick yourself up the first time and get outside, you're winning. Because you know that your emotions are taking over your trading. And when you realize that, you can start to get it all under control. So the real difference between profitable traders and unprofitable traders isn't entries. It's how they behave when they're already in a trade. Because trading, it's not about money. It's about the follow through. You can't control the price, but you can control when you get in, when you get out, how much you're willing to risk, and how quickly you accept being wrong. And to be honest with you, I'm still working on this every single day. And to be honest, I think most of the professional traders out there are as well. Especially when I went full-time trading around 3-4 months ago, the urge to close winning trades quickly just to almost get a payday was so strong. And I really just had to take a step back and just really control my emotions and get a lot stricter with my plan. But that's the difference. Now I notice it. Now I understand why my brain does it. And that's why I've made this video. So hopefully you guys can start noticing this a little bit more. And as soon as you start to notice it, that's when you can start to improve on it and fix it. So if you enjoyed this video, please feel free to like and subscribe. Like I've mentioned before, I've just started a Telegram group called The Trader's Mind. This is a group which you can join and it's purely about trading psychology. So before every trading session, I'll give you a quick psychological breakdown before London and New York. And we'll also do a daily wrap up as well. So you know what you did right, what you did wrong, and how to improve it. My DMs are also open in that group. So if you want to ask me anything in private, I'll get back to you as quickly as possible. And the link for that Telegram chat is down below in the comment section. With that, I've also put the link to XNES and FTMO, who are the brokers that I use. And again, if you have any questions, put them down in the comment section and I'll reply to them as quickly as possible. Again, thank you so much for watching and I'll see you in the next video.